As we close in on 2023, the calendar year, I think it's an opportune time to reflect on what has happened in global economy and financial markets. It has been an interesting year. The Russia-Ukraine crisis, which started last year, has continued to come and have its place this year as well. We have not seen a full-fledged resolution on that. As it continued, we had another breakout from a geopolitical point of view, which was between Israel and the Hamas group of Palestine. That crisis again created volatility in the market during the later half of the year. That issue also is continuing to haunt the markets as we speak. We don't have a resolution on it. As is the nature of the markets, we tend to kind of ignore any event which has been going on for long term and keep the focus on something which is more incoming. So obviously a lot of the geopolitical tension is behind us. Surprisingly, all this while the oil prices have been rock solid. We have not seen oil prices increasing a lot, which has helped India obviously in some specific way, which we will talk about. Also interesting was the development of AI that it has taken in many forms. The kind of impact we have seen of AI in multiple sectors is very, very impactful. We are obviously foreseeing a lot more impact that we will see in coming years. Talking about the most developed country in the world, United States of America, they had a stellar 2023. I think the US economy has surprised most people by its resilience. The job data, the GDP data, everything continued to be very strong. There were a lot of observers or Fed watchers, as we call them, who thought that the Federal Reserve will start to cut rates this year. In fact, what has happened is that the Federal Reserve has increased the rates multiple times this year. Despite the fact that US consumer price inflation has come down from 6% plus levels early part of 23 to as low as 3% levels, the Federal Reserve has been focusing more on the growth numbers, the unemployment numbers, which has been extremely resilient. And what they've done is they've actually increased the Fed rate by 4 times in 2023. And now we have the US Fed rate at the multi-decade high levels that we have seen. It has resulted in one obvious outcome, which is the strength of USD against most currencies, including emerging market currencies like rupee. Coming to our home country, back in India, I think India has had a very good year in itself from a macroeconomic point of view. The volatility that we saw in GDP numbers post-COVID has settled down. What we saw is consistent 7 to 8% real GDP growth rate on a quarter-on-quarter basis this year, which kind of is coming from the fact that our domestic consumption continues to be strong, and India has benefited a lot from the China Plus One theme of manufacturing in India. We have spoken about it multiple times in our previous newsletters as well. One of the advantages of high growth, which is essentially capacity expansion, is that the inflation tends to be under control. Even though in the beginning part of the year, the higher food prices resulted in high inflation, we had the normal monsoon that we saw, which kind of ensured that the food prices kept under control. Also, as I said earlier, the global crude prices have also been under check. So net Indian inflation has come down to levels of closer to 5%, which is what Reserve Bank of India has been wanting. And what we saw is that for pretty much almost the entire calendar year, RBI has kept the policy rates very constant. In fact, most RBI watchers from a macro point of view are expecting the rates to continue to be this way, and probably the next move to be a cut, unless there is some kind of a shock that comes from global markets in 2024. Coming to Indian equity markets, Nifty and other indices has had a stellar ride in 2023. After a good 2022, a lot of market observers started expecting some sort of consolidation in 2023, which was not to be. Though the indices and some stocks in specific were very volatile, point to point, if you see the performance of most of the indices from Jan till date, it has been stellar, if not, for the lack of a better word. Nifty has gone up by 17% as an index. So the large cap itself is up by about 17% for this year. However, what is more notable to look at is the performance of mid cap and small cap. We have seen mid cap and small cap up by more than 40% in this calendar year. And I have been watching the markets for a very long time. What I'm now observing is that the outperformance of mid cap and small cap index to Nifty is at record high levels as we speak. Will it be sustainable or not is something that we will look at in a later discussion, but the fact remains that the outperformance of mid cap and small cap has surprised one and everyone, and the mutual fund returns have also reflected on this fact. The biggest euphoria that we saw of this bullish phase, I would think, is in the IPO market. We saw a record number of IPOs that got oversubscribed. The performance in the secondary market have been mixed, but that did not kind of reduce the enthusiasm of the investors to apply for these IPOs. In fact, if you want to see market frenzy and probably madness in some cases, you should reflect on the SME IPO segment. Those IPOs have been oversubscribed by more than 150, 160 times in many cases, and a lot of that looks a lot like a liquidity-driven bubble as compared to a fundamental story that is backing some of those IPOs in specific cases. So one would want to be a little careful if you look at those numbers, but the fact is 2023 has been a brilliant year for Indian equities. Looking at the valuation, what has happened is that the broader market, which is the large cap, reflected by Nifty 50 or Sensex for that matter, has been broadly flat. So if you look at the last 2 to 3 years performance of the large cap index, the CAGR is in single digit. However, the price to earning ratio has also not gone up despite markets being at all-time high. So we are still hovering around 21, 22 times price to earning on Nifty. This is on the back of a very robust EPS increase that we have seen. So the earnings per share of Nifty companies is up by almost 16% for the third year running, which obviously ensures that the Nifty PE doesn't look like an overvalued number. And that is one of the reasons where every time we saw Nifty correcting a bit in 2023, a lot of money was poured into it, and that ensured that markets touched all-time highs multiple times during the year. And as we speak, as we make this video, we are still close to the all-time highs for Nifty. One major positive for equity has also been the influx of FPI money back in the market. So the foreign portfolio investors have been net buyers in equity as we speak in 2023, and that has resulted in a lot of stocks again rallying from their levels, which were lower than when we started this year. One interesting aspect of the entire financial markets that has been extremely rare to see is the resilience of dollar against emerging market currencies like rupee. So despite the strong flows of FPI coming into India, rupee has been more or less stable to depreciating. We have not seen any significant appreciation of rupee. If you see the dollar rupee chart over the last 6 months, the volatility in dollar rupee has been reducing significantly. We are kind of in a very, very narrow range as we speak. And that has been very surprising, something that I've not seen for many years on the dollar rupee chart. So it will be very interesting to see how these macro factors unfold into 2024. Obviously, it's a big year because it's the union election year again. And there are a lot of other geopolitical events that obviously we will keep a watch on. What we will be doing at House of Alpha is we will be coming out with our outlook on 2024, and we'll share it with all of you very soon. I wish all of you on behalf of House of Alpha a very, very happy festive season and a brilliant 2024.